Well, good morning, everybody. My name is Luis Estevez. I'm a principal at Jansen Adjusters International. And today we're going to be talking about that sexy topic of insurance for multifamily investors. Okay. Now, I know there is very little that most people want to know or understand about insurance, but once a year when the renewal tab comes. But as of the last freeze events we had here in Texas, we got a barrage of phone calls coming in with questions about what coverage was available, what wasn't, things like do I have to keep my heat on, and so on. So we figured that'd be a good way to answer a lot of those and direct some of our clients and prospective clients to this webinar. So I will get started right away. And one of the first issues that we come up with when we get a phone call, the very first question is, what does your policy look like? What coverages you have available. And there's several types of policies out there. Uh, for the most part, the average multifamily investor will have a commercial policy, what they call the CP forms or so on. If you have several properties, you might have a manuscript policy or blanket coverage that allows you to cover them all on one property. And then there's considerations like flood and wind. You would be surprised how many times somebody will call us and say, well, I was told I didn't have any coverage for a windstorm, and I have a property, 8, 20, 30 units down by the coast. We just got hit by a hurricane. So windstorm coverage is not an automatic coverage; it's an add-on. It's something to keep an eye on if you're in that area or you know you're going to be affected. The same thing with earthquake coverages and things like that. So normally you're going to go look at what perils are you covered under. That's the number one thing. And that's a question you really should have with your broker when doing the policy acquisition. Uh, Policies are usually divided in all risk. It used to be a standard fire policy back 100 years ago, and that's all it covered were fires. And then it started added on different coverages such as collapse and water damage, not flood, but water damage from a busted pipe, like we had many here in Texas. So then it became like all risk policies. And when you start seeing the all risk policies, is that everything is included, but then on your endorsements or exclusions, you start having excluded perils. Okay. So it's very important to know the difference between those and what you're actually covered for or not. And it's something we'd be happy to look at your policy and interpret it, or your broker or agent can do the same thing. And make sure you have the right coverages because it's really unfortunate when you've been paying insurance and you think you're covered for something, you assume you are, and then the fine print tells you nope, you have zero coverage. Uh, the second thing we want to look at is the kind of normal recovery that multifamily investors have available to them. And we get a lot of questions about this. Are the water heaters covered? Is the landscaping? How much of the roof is covered? What about the siding? So these questions come and go, and a lot of these answers are found in the policy. Okay. So for the most part, the policy will cover structure, your building and all the outside and inside of it. Very, very clear cut situation there. But then you have your business property, right? And that's everything from the golf cart you used to take around your prospective clients there to your lawnmower equipment if you have it yourself and things like that. Maybe some lawn chairs out there in the pool, things like that. And then you have your business interruption, and this is something that it could be a whole nother seminar on business interruption. But for the most part, what you want is that if you have an unfortunate event and one or two or three of units or more are damaged, that you're going to be able to collect rent. Okay, that loss of income, the loss of rent for those clients that left, those tenants. However, if you're able to move them somewhere and you had empty units, then that kind of muddles the water a little bit, right? Because a business interruption is a loss of profit coverage. Now, there's a rent loss coverage, which falls in the same category, but a little different. It's calculated a little different. Uh, and sometimes you have a direct rent loss where, hey, you lost your tenant for a covered peril reason, you're going to get paid, uh, or you're not going to get paid if you don't have that coverage. Okay. So it's important to talk about those and get them in the right order, at least in your mindset, and make your notes in your policy. I mean, you'd be surprised how many times I walk and say, look at the policy and they're asking me questions. It's the first time they've ever seen the policy themselves. Okay. The code compliance is something else we get a lot of questions on. Okay, and code compliance and increased cost of construction are all wrapped up in that law and ordinance coverage. Okay. If you have a building that's brand new, you most likely will not be forced to bring anything else new to code if you have to rebuild. And let's say, worst case scenario, you had a fire, a tornado, and knocks out half of your building. Okay. If your building is from the 1970s or the 1980s, as a lot of this small and medium multifamily investors tend to own, then you're going to have an issue. You're going to have to bring that building back up to code, and whether it be a better roofing system, the plumbing, a lot of times is the old plumbing that has to be brought in, or it's not attached correct. You might have aluminum wiring, which becomes exposed, and now you got to change that to the new wiring, and you got to rewire your entire building, whether it was damaged or not, because the city is forcing you to do it to comply with the new codes. Everything like insulation, window types, and so on. Uh, we can talk about code compliance a little later, but and then you have debris removal. I mean, that's usually a part of the policy that's included that a lot of people don't access. And if you have something like a tornado or a hurricane, you're going to have debris all over the place. And most folks just go ahead and get their, you know, maintenance guy and help with it and so on. And somebody might get hurt, or there's a lot of different situations that can happen with debris removal that you have to be aware of what kind of coverage you have so you can maximize it and get the debris in and out of your property immediately. So you're not affecting the tenants that you still have. A lot of this information you're going to find in the declarations page. That's the first one, two, three pages to start with your name insured, what type of building you're covering. Okay, it gives you the limits of insurance. Okay, and it's not the limit on the building itself. You know, you might have a building limit of $12 million, for example, but it's important that you go down and you see what limits are sublimited. Okay, for example, debris removal is going to be sublimited. The code and ordinance usually has a sub limit 125, 250, 500. Now, some of the better policies have an all in inclusion where it's the same limit for the code ordinance as it is for the building. So there is no sub limit. Okay. Your optional coverages are in there. Okay. The endorsements is very important to read through those and understand what they are. This is where we get into the details of a policy, right? And this is where most of the questions that are brought to our attention from, and where the answers can be found. Okay, what does that endorsement mean? What does it mean for the type of loss I had, and how much does it restrict or enhance? A lot of endorsements are for enhanced policy. Okay, sometimes you'll have an area where the policy says you got coverage for A, B, C, and the endorsement says no, forget all that. You only have coverage for A, but we're giving you D, E, and F as well. So these endorsements, sometimes you get them halfway through the policy period, right? And most people, like I used to back when I was a business owner, I'd just file them in a cabinet somewhere. Wouldn't even read them. This changes your policy. Okay, well, great. Thanks for sending it to me. Uh, so it's important that we know that. And one of the things that we asked a carrier when we get involved right away is if we can have a certified copy of the policy. And what that means is all the endorsements that were in place up to the date of the loss have to be included in a certified copy. Because sometimes the copies that we get from our clients are the ones I have from a year or two ago. Sometimes they're not even the current policies. That brings me to the next point: is the policy dates. Okay, uh, we get calls and folks say, "Hey, my policy expired last week. I was in the process of doing it. I didn't get a chance. The broker wouldn't answer a call. Whatever the question was, those dates limit your coverage. It's a contract, and that's what a policy is. It's a contract written by the insurance company, accepted by you for the conditions, and you can negotiate some of the conditions before you purchase a policy, but not afterwards. Okay, the name insured. That's another big one. Okay, if you bought your property directly and you're the name insured, you don't have problems. If it's through a corporation, you might have to go through a couple of hoops to prove that you have ownership of that corporation. If it's in a trust, which we see a lot of it, okay, who's in charge of the trust? Do we deal with the attorney in charge of the trust, or the trustee? Okay, uh, so you got to make sure that you understand what having somebody other than yourself or your spouse as a unit be the name insured of this multifamily investment you've purchased, and what that brings into play in an insurance claim. Okay. And then additional financial interest. If you're financing the loss, the bank's name is going to be on it. So anything we do during the process, we're going to get the bank involved. We're going to talk to them and make sure that they are, a part of the loss because they're going to come calling pretty quick when the loss happens. Okay, so I am going to over this real quick again. There we go. So let's talk about claims challenges. Okay, and this is when we tend to get that call. Okay, most people are not aware exactly of what they're covered. So one of the biggest things we see when we're analyzing a loss, it's poor coverage. Okay, you have limited amount. Your building today is worth $5 million, and you're covered for four, and unfortunately, it burned to the ground. Okay, or you don't have enough increased cost of construction or law and ordinance, as we spoke in a couple slides ago. So now you're in the position where you have to rebuild something according to certain codes, and the cost is not going to be 5 million; it's going to be 5.5 million. Okay, something that I want to stress during this scenario is that we're seeing an incredible amount in increase of cost of building materials, wood, steel, shingles. I mean, they're going up 30, 40%. A lot of the ongoing claims that we have, we're having to go back to the insurance company and say, no, sorry, we agreed to rebuild the building for 800,000. It's now going to be $1 million. And well, prove it to us, right? And then here's the proof. And here's the cost from the building, from the lumber yard. So you get into all those scenarios as costs keep going up. And what I would strongly recommend is you sit down before your next renewal and you have an assessment done on your policy on your property. Figure out how much is it really going to cost to put this property back together. And if the answer is 20, 30% more than what you bought it from, then you got to consider insurance for the right amount. Okay. So then you can get into other situations like co-insurance or penalties for not insuring to value. You got to make sure you understand what that means. So this is going to be a crucial year for a lot of our clients. The big investing firms, they get this advice from us or from in-house counsel or from their brokers that manage their multi-million-dollar portfolios. But for the majority of the typical multifamily investors, they don't get this kind of advice, and they don't understand why their policy now is not covering to rebuild this complex that they fought so hard to own over the years and save money and as their primary source of income to a lot of the clients that we talk to. So it's important that you understand what the value of your property is when you're insuring it. Your deductibles is the same thing. A lot of things on the windstorm deductible. Look, it's 2% or 5% or 3%, but it's of the total value of the loss. Again, total value of the property, not the loss. So if your property is worth 10 million, your deductible is going to be $200,000. Okay. Wind-driven rain. We see a lot of that now around the coast. And basically, I'm not going to get into a whole the ordeal about wind-driven rain, but it limits your coverage. And if you have $2 million coverage, then you're most likely going to be okay. But if you have $100,000 worth of sub-limit on wind-driven rain, it's going to be a fight because all of the damages that come in from windows and doors, if they don't break the window and door, could be considered wind-driven rain, unless we find a direct physical opening or direct damage to that window and door. So it makes everybody's job harder. And keep in mind that when you have a loss, it is your duty, your job to prove the loss, to present it to the client. Now, in most states, the insurance carrier has to prove that you don't have coverage. In places like Texas, the onus falls on the insured or on us as public adjusters to prove the loss and prove the amount of the loss and the type of the loss. You can get into a situation where multiple policies have multiple perils, where you have hurricane and flood happening at the same time, where you have several carriers. Okay, if your carriers are stacked, your first carrier might have a limit up to $2 million, and you have to address the loss. And when you get past 2 million, and they agree, oh, okay, well, I'm sending you a check for 2 million. Now we got to start over with a second layer that has from 2 million on. Sometimes these are percentages carriers, and they hire one adjusting team, and they're a little easier to deal with. But it's a possibility. So there's a lot of moving parts to a claim that the average investor hopefully never has to experience. But when you get that one or twice in a lifetime claim, it can be catastrophic if you don't understand how to maneuver your policy. and how to get the most out of your policy, right? About that contract that you signed 10 years ago, 15 years ago when you bought the property, and you just keep renewing it every year. So it becomes kind of default, right? Very few people look at that unless you start to get into a lot of properties, or you have a loss and you're like, okay, wait a second, I really got to get a little more informed about what I have. Uh, there's a lot of claims challenges when we can only talk about a few here in the limited time we have, but they just come in all sizes, shapes, and forms, and usually they don't end well for the insured. Uh, Back to the duties that you have after a loss, and this is important because we get a small amount of complaints or claims that come our way once somebody hasn't complied with their duty, and at that point, it really becomes a policy contract issue. It becomes a dispute for the judge and the courts and attorneys, and we have our hands tied. The first thing you have to do is when you have a loss is you have to report it. Very simple. They most policies give you three duties, and some they add four, five, six others. But for the most part, you have to report the loss. You have to protect the property, keep it from getting worse to the best of your ability. And sometimes that's a little tricky. I mean, those of you that were in Texas or Oklahoma or Louisiana and experienced the freeze we had in February that the whole nation found out about, okay, you couldn't find a restoration company to come in. So, okay, you turned off the water. That was, for the most part, fairly simple. Or the fire department came and turned it off. And now you have a wet building. And what do you do other than go buy a bunch of shop vacs that were non existent at Home Depot or Lowe's for the first month to the loss, right? After the freeze. So you're sitting there dialing like crazy, trying to find a restoration company, trying to find somebody to come help you. And 4 days later, it got a little warm and the M word came out, and mold and all kinds of other issues started coming out. Now they're from water damage, okay? But if you can't prove to the insurance company that you made 45 calls to 10 different restoration companies, and who'd you talk to, and they put you on hold or told you we'll get back to you in a week or two or whatever, then you can't prove that you actually presented your duty. You didn't do what you were supposed to do, which is try to protect the property. And same thing with the storm when you have tarping and you get the tarp up on the roof and it flies away the next day in a windstorm, and you do it a second time and it flies away, and by the third time, your home's gotten away, your investment is wet, and the repairs are going to be more costly. Okay, but you got to keep a record that you attempted to mitigate. Okay, and then the last thing is you got to present the loss, and everything else that we have here on the slide, it's about presenting the loss. It's about keeping records of your expenses. You got to produce an estimate of your structural damage, and a public adjuster can help you with that. Or if you have a contractor, you might want to hire him and say, well, just for the estimate, they can't negotiate a claim for you. In many states, that's against the law. But what you can do is have a contractor write an estimate for you. Okay, and on some simple trades that works, and that's what you present to the insurance company. Okay, somebody's willing to do it for this amount of money. Inventory and damage contents, that's up to you. Most carriers will give you a list and say, here you go, fill it out. Okay. And you don't even get instructions on how to do it. So you got to provide access to the property. You got to let them come inspect. And then the proof of loss situation. Okay. A proof of loss is a legal document that the insurance company will mostly send you or ask you to fill out with what your loss is and anytime you're expecting payment or payment exchanges. Some companies might not require it till the very end. Some even for an advance, you get $1 million advance, $10 million advance, whatever it is towards your loss, they're going to ask you to write a proof of loss that says, hey, this is my loss. I certified this. I'm this person. I'm the owner of this property. Here's my circumstances. Here's the bank's name, right? If there's any kind of lien or mortgage on the property. So you have to provide that to the carrier. And it's important that you look at it because some of the policies says you have to send us a signed and sworn, means notarized proof of loss within 60 days. Some says of the time they're requested, some are automatic. And if you fail to produce it within the time they requested or the policy states you have to, you could be in the peril of actually not getting paid for the claim. You go back to zero. You did not meet your duties after the loss. Okay. So it's important that you know about these and you read them right away. Or if you have any questions, you can call somebody like me or, again, your broker, your agent, somebody that understands the policy can explain to you what your duties are after that loss. The insurance company has duties as well. right? They have to acknowledge receipt of your claim. They have to begin an investigation in a timely fashion. And most states, that's 15 days from the date of the loss or the day you reported it. In some catastrophes, those get extended because obviously everybody got hit in the area. They got to tell you the kind of information they need. They just can't be vague about it. Okay. And they should provide the coverage positions. Now, a lot of times we get called after an insurance adjuster has shown up and kind of say, well, I'm going to need this and this and that. And they don't really take the time to explain the coverage. They might tell you what's not covered, right? And people get a little freaked out about that. But, and for the most part, is that they don't even have your policy with them. Again, it goes back to the first question we ask anybody that calls us asking for advice pre or post loss is let's take a look at your policy. Okay. They need to make timely payment on a claim. And I won't even get into this because that can be a night of the improv. If you start asking my opinion on timely payments, that's the number one reason we get a phone call is when people don't get the timely payment. And then if you're going to get denied, they got to give you specific reasons for the denials, or needing more time to investigate. And this only happens if you're constantly pushing it. But these are part of the duties that they have under the property, under the contract, right, which is your policy. Uh, some more challenges that happen after the loss. And these are not necessarily claims for policy related, but these are actually, real time. Any of you that are listening that have had a loss know exactly what we're talking about. One of them is the timing of the repairs. Again, if you couldn't find that restoration contractor in Texas after the freeze, and it took 3.5 or 4 months for somebody to come in and try cleaning your property, well, I'm sure the damages were going to be a lot larger than they were if you had just done it, 2 or 3 days after the loss and mitigated and helped the spread of the damage from water or the open window that busted out or the pipe that leaked for 3 days or so on. Okay. And then you got to get into the timing of, who's going to do the repairs now? Do I need to get a contractor? And how long is that going to take? Can I do it in house? And the whole time that you're doing that, you're losing rent. Okay. So you're bleeding cash, you're losing rent, and it's important that you get that squared away and settled and agreed to with the insurance company to the best of your abilities. Uh, the movement of tenants. If you have a big enough property, you can probably move those tenants that were affected in building L, okay, to spread them around 4 or 5 other buildings, and you're fine. You don't really lose rent. You don't lose your normal revenue. Now you've lost those other make ready units that you had, and there is a loss of there that's a little different to prove. But you were able to move tenants. But there was a cost associated with moving the tenants. So you put it on your tenants because one tenant cost a fire, or maybe it was natural cost, or help them out. And can you include it in a claim? Okay. You got to manage the claims adjusters, and that's an entirely different ballpark because they come armed with all the knowledge for the most part on how to manage a claim and how to go through it. And even though they're supposed to be there to help you, most of them they work for the insurance company. They're there to minimize the payout inside the policy. Let's call it for what it is. The ones who've been around for a while understand there's a happy medium and a compromise and everything, and they push it. But for the most part, we hear the horror stories and we encounter them every day of adjusters that are just not willing to look at anything and not willing to concede and they're always you got to feel right away if this is going to be a guy that I can work with or if this is a guy that's just sitting there to cut his losses, close his file, and pay as little as possible. uh, you got to manage cash flow. Okay. And that's an important one because if you have a bank note that's active and all of a sudden you lose a third of your revenue, talking to your bank about the prospect, it's a little different when you're having the conversation and you don't really know what's on and you don't know how long it's going to take you to repair and you don't know how long it's going to be for the insurance company to pay you and all these other question marks and the banker is looking at you like, well, what do you know? Okay. You're asking me for help, but I need some evidence. I need something to work around here. So maybe we can get an extension. Maybe we can work some things out. And then when the check comes from the insurance company, it will have the bank's name on it. So at the very least, you got to start that conversation with the bank on what does it look like for them to give the money back or pay the contractor. Are they going to want to pay direct? Are they going to want to deal with the contractor and and get all kinds of evidence from them and AYA forms and specific payment apps and all these things that come into play because now the bank's holding the money. and they're your partner in this, so they should be concerned about it. Uh, so all those things come into play. Do I have the right contractor? We get asked for contractor referrals all the time, and it's not something that we do. We're not allowed as public adjusters to get involved in the repair of the claim, but we do know a lot of players. We know the good ones and the bad ones, and usually, we tell our guys if you give them two or three names, and then it's not a referral. It's more like here's some names of people that we know do well for our clients, right? Uh, But you got to go find that right contractor because you don't want a second claim because of faulty work. That's not going to be covered by the insurance policy. And if they did faulty work, they probably have a faulty insurance policy themselves that doesn't help you when you're trying to make a claim again. Okay, presenting your loss of rents. I mean, some people that have gone through this before understand how that works, but it's not as simple as just giving your P&L to the insurance company. Okay, extra expense. Well, again, extra expense could be we talked about moving tenants from one unit to the other. Well, that's an extra expense that you incur so you don't lose the rent, right? So they don't go away. If most people say, well, if I got to move, I'm going to move out of here anyways. Okay. Well, no, let me help you move. Let me pay somebody 500, $1,000 to move you from one unit to the other. And we tell the insurance company, I mean, you got to notify for the most part, hey, I'm going to do this. I'm going to spend $5,000 moving the tenants so I don't have a loss of rent immediately. Okay. And in the end result, it's a lot less of a claim. It's cheaper for everybody to do that. But you got to get it, past the insurance carrier and explain to them why you're doing it and justify it, right? So the extra expense, the quick definition is things that you have to spend more money in order to lessen the overall loss. A perfect example is, you need a pipe for your chiller that busted right after this freeze. And if you FedEx the pipe, you can have the chiller up and running by the time it starts to heat up. And if you don't, you're going to need a temporary chiller for a month, which is the minimal rental that we're putting them out there. And that's $7,000 versus paying an extra $400 to expedite a part. Okay. So that's extra expense to lessen the total loss. Okay. Now we talked a little bit about loss consultants, okay, and a lot of the companies that cater to multifamily investors, they're not your normal state farms that have a big staff of adjusters and a bunch of jakes running around and so on. They usually outsource the claims process, okay. And what this means is you're going to be talking to a third party adjuster. That adjuster gets graded and judged on how well they run all these claims cumulatively for this insurance company, right? And they negotiate the contracts every year, like you negotiate a policy. So they have probably a higher vested interest in doing the right thing, but by the same time, not going overboard or not paying anything that somebody doesn't ask for. If you didn't present it in the loss, it's not their duty to go and find it for you. Okay, it goes back to the who's got what duty inside the policy contract. Uh, a lot of these experts, they're going to bring in. I mean, a lot of contractors and insurance adjuster, right? We call them IA, independent adjusters. They're going to bring in their own experts. They're going to bring engineers to determine how bad the hailstorm was, or how much bending actually took place after a tornado, or is that chiller system really needs a full replacement at a couple $100,000? Can we just repair it, right? And you're going to have your experts on the other side matching opinions, either coming to agreements or not. A lot of times you think contractor might be able to help them that, but this is where it gets tricky because contractors really can't be negotiating a claim or arguing the claim. And you might have a contractor that's really good at one thing. You get him into a conversation with a lot of mechanical engineers talking about a chiller system, right? Or a boiler or so on, and he's gonna be lost. He's not gonna have opinions. So the barrage of experts that are thrown into a claim these days, especially on the larger claims, is very complicated. And somebody has to manage the experts on your end, and somebody has to be kind of the orchestra conductor. A lot of what we do as adjusters is we take control of the claim and we conduct this whole orchestra of experts and presentations and negotiations with the insurance company. And you always have the last say. Okay, that's one thing no adjuster can do for you. It's do a final settlement agreement without your consent. Uh, but it's nice and very comforting to have somebody that can match the experts, talk the same language, understand the policy, make arguments where the policies are a little gray. There's a lot of gray areas in policies. Okay. I always recommend, when you get a complicated claim, look for an expert or two or three, or look for a public adjuster that can help you and bring those experts to the table. Okay. And some of the benefits of hiring somebody like us, and I'll go through this quickly, but the high financial recovery, it's always the first thing that people look at. Well, how much more can I get if I hire you? Well, how much more is you can get every penny you're entitled to. It's not above and beyond what your policy covers. Nobody can do that, but it's every penny you're entitled to within the coverage you have and the type of loss you had. Okay. The claim settlements for the most part goes faster because in every public adjuster contracts, they don't get paid until you get paid. So we have a vested interest while we're spending money on your behalf and experts and so on to get a claim settled as fast as possible. Okay. Now, within getting you every penny you're entitled to, right? It also allows you to focus on your core business. I mean, a lot of the multifamily investors that to us as clients, this is not what they do full time. Okay. It might be doctors or attorneys or entrepreneurs or run their own manufacturing plant, and they decided, I'm going to park some money in real estate and buy a couple of condo complexes here close to the coast where I live, and the hurricane hits, and they're dealing with their own business losses or their own problems or the expanded of the demand that is required of their business because now whatever they produce is in demand because of the hurricane. So all these things come into play, and that multifamily investment just kind of starts getting put aside and put aside. And let me tell you, if you're not on top of the insurance company, they're not going to be on top of you to get you paid. Okay. Uh, and then we talked about some claims challenges as those start to mount. People get frustrated, and then they start saying, "Well, I'll just take whatever you give me, and I'm done with it. I'll fix it later. I'll deal with it later. I'll figure it out." And it's not the right way to approach it. I mean, you've been paying a premium for many years in order to have that kind of protection when it came, when the loss comes. So uh, help managing the contractors. Again, we don't get involved in the actual construction, but we can sure help in managing the contractors, making sure they stay within the budget agreed to by the insurance company. If something like a change order pops up, we're that bridge to tell the insurance adjusters, well, look, we had to increase the price of lumber, and here's why, and we got to prove it. When the contractor throws that at them, they're like, they raise their eye and say, well, we don't really believe you can do it for less than that. I'm sure and it becomes a negotiation for their fee instead of a negotiation for the coverage that you paid for. Okay. And most contractors will get intimidated by that. And okay, well, we'll do that. And they'll find a place to cut here and there and get you back to where you need to be, but you didn't get what you were entitled to. Okay. And then exploring all portions of the policy. There's a lot of different areas of your policy where you might find coverage that are not immediately apparent to you till you get into the process. And sometimes it's too late to ask for them, right? And then we got unrecoverable losses if you're in some recent a nonprofit or church group or so on, and government entity, and you're entitled to FEMA relief, or you know if you ended up having some areas that are uncovered, how do you present that in your next year taxes so you can at least get a break? So there's quite a few other things that come along with settling the claim and dealing with some possible challenges or shortfalls that your policy might have, where we could help you outside of the policy. So uh, that's about it. I was told to keep this under half an hour. Hopefully, I was able to do that and give you all enough information. If I got to leave you with something, it's read your policy. Take this weekend off whenever you listen to this webinar and just sit and read through it, underline it, highlight it, ask questions, write in the margins of it, and then talk to your broker or give me a call. My phone number is up there, and that's my email address, lestevez at jansenai.com. We'd be more than happy to help you. Advice is always free and consultations. And remember, the first thing I'm going to ask you is, what does your policy look like? So have that ready. And if you have any questions while you're reading the policy, before or after a loss, give us a call. We'll be glad to help. And thank you for your time today. My name is Luis Estevez with Jansen Adjusters International.